So today we'll talk about AudioCodes, ticker AUDC, which is a position of mine. I will discuss the stock, its role in my portfolio, and explain to you why I bought it. Now, before we begin, as always, nothing in this video is investment advice. So I started my position in AudioCodes at the end of November at a price of $8.85. And well, until now, thank God this position has only brought me happiness. After all, I was able to achieve a return of almost 40% in just a matter of months, which is not bad at all. Now, what's AudioCodes' role in my portfolio? Actually, AudioCodes is in my family's portfolio because you see, I have two portfolios. One that is mine, where I take on riskier positions like Voxter or Reclaim, and another one that belongs to my family, where I focus on more stable companies. Companies that have already been generating cash for some time, that are already profitable, that also don't present extreme volatility. So those are the kinds of companies I try to focus on there. Besides, my family's portfolio is also much more diversified than mine. Well, with that said, AudioCodes is in my family's portfolio, and I've been focusing on diversifying it more. So I've been buying several good companies with very good margins and that are also trading at very low valuation levels. And my idea is to have several small positions in these kinds of companies, because this way I believe I can optimize my risk-return ratio. So that's where AudioCodes comes in. AudioCodes is an Israeli small cap that I first talked about in this video here. It was founded 31 years ago in 1993, and currently its market cap stands at around $370 million. However, when I bought the stock, this company was trading at about $270 million. And I see AudioCodes as a cheap company with a lot of quality. Now, before I explain to you why exactly I bought the stock, let's talk a little about what this company does. AudioCodes is a technology company specializing in voice networking and communication solutions. One of its main focuses is on voice over IP, which is a technology that allows voice calls to be made over the internet instead of traditional phone lines, which makes communication more flexible and cost-effective. So AudioCodes offers a wide range of products, including hardware devices, software, and cloud services, mostly designed to optimize voice communication over the internet. And their solutions are used by businesses to improve their internal communication systems, as well as by service providers to support large-scale voice services. And AudioCodes serves some pretty big names. For instance, as we see here, 65 of Fortune 100 companies are AudioCodes customers. Besides, the company operates in 120 countries and is the #1 Microsoft Teams phone partner. So we are definitely talking about a real company here. But that's what they do. Their products help to improve voice traffic management, call quality, and ensure secure and reliable communication. So that's the market AudioCodes operates in. And I believe this company can benefit a lot from this global digitalization trend we are testifying. After all, AudioCodes has been working in this voice connectivity sector for 3 decades now. So I think this company is pretty well qualified to serve this industry. So as businesses move towards cloud-based solutions and remote communication, the demand for reliable voice connectivity will probably grow, which will result on more demand for AudioCodes services and products. However, honestly, I ended up buying this company more for quantitative reasons than qualitative ones. In other words, the numbers and the low valuation attracted me much more than the company's actual business, than the company's idea. But to be fair, I don't fully understand this company in detail since I lack the technical knowledge for that. And that's also why my position in AudioCodes isn't big. The thing is that I can see through the numbers that there's something positive about this company, that there's value in AudioCodes. For example, look at the gross margin AudioCodes has been showing, around 65%. And they've been delivering that for about 10 years. And a gross margin like that is important because it shows us good execution, and it also shows us that this is probably a good business. After all, it's not easy to maintain a margin like that for almost a decade if your business doesn't have, for instance, strong barriers of entry or strong competitive advantages. In fact, if you look more closely, you will see that this margin has even been slowly expanding. If in 2015, here, AudioCodes delivered a 59% gross margin, now we are talking about a 65% margin, which is definitely an improvement. Also, over the last 10 years, AudioCodes has been delivering operating profit as well as net profit, as we can see here. No negative years, which is another big positive. Additionally, if you look at the company's balance sheet, you'll see that AudioCodes has a negative net debt of $54 million, which means that the company has much more cash than debt on its hands. And finally, talking about cash flow, this company has also been delivering positive operating cash flow over the years. And if you do the math carefully, you'll see that AudioCodes has delivered free cash flow every single year too. And by the way, this platform I'm using is called Seeking Alpha. Link with a discount in the description. Anyway, what these numbers tell me is that this is a solid company with a stable and sustainable operation that's been delivering a good performance over the years. However, there's one thing many see as a red flag and a reason not to invest in this company, which is its low growth. If you look at AudioCodes' revenue, you'll see that since 2020, it has barely moved. In 2020, it stood at 220, and now it stands at 242. And many investors will choose to stay away from AudioCodes because of this. But just because a company isn't growing doesn't mean it has no value. My point here is that even though this company hasn't shown a lot of growth, it must be doing something right to deliver these margins and this consistency. So despite the lack of growth, I think AudioCodes is a quality company. The thing is that to make a good investment, a company needs to be more than just good. It also has to be cheap. But I think that AudioCodes checks this box. For instance, AudioCodes stock is currently trading at 1.3 times enterprise value to sales. However, since I bought the stock at the end of November, this means that I got it at around 0.9 times enterprise value to sales. For a well-structured company, meaning no debt, profitable and generating cash, I don't think that was a high multiple to pay, especially considering that the historical average of this metric for AudioCodes is around 2.2 times, according to ChatGPT. Actually, in good market conditions, this stock can trade at, for example, 4 times enterprise value to sales, even at 6.2 times. But for that, well, we need interest rates near zero, right? Anyway, to close this video, that's why I bought AudioCodes stock, because it's a well-structured, solid company trading at a low valuation. And that's why I decided to start a small position here. Now, I will try to make other videos about this company. They've actually just released their Q4 results, and I would like to make a video covering that. But anyway, that's it for today, and see you next time.